Hello, traders, and welcome back. After a very short break, we'll resume again with our weekly episodes. Today is the 10th of September, and here are the key things you need to know about today's markets. This week brings major events for both the US and the European economies. The US CPI report is expected to confirm easing inflation, potentially pushing the Federal Reserve to make larger rate cuts. The ECB is expected to continue cutting rates, adding volatility to both the Euro USD pair and gold price. Gold prices are steady at this stage, nearing 2,500, remaining $30 below the record high. Traders are cautious ahead of the US inflation report, which is expected of a CPI drop to 2.6%. This data could lead to larger Federal Reserve rate cut, as mentioned, which could boost the gold prices due to lower opportunity costs associated with non-yielding assets. The euro has slipped below the $1.11 mark, reaching to $1.1030 as traders prepare for the upcoming economic report. This focus on inflation data and European banks' interest rate decision is the key headline for this week. As I mentioned earlier, the CPI is expected to show inflation at 2.6% for August, influencing the Federal Reserve rate decision. And then the ECB is likely to cut further, with projections suggesting a drop to 3.65%. Moving into the economic calendar, the week started with the inflation rate out of China. So that came higher than expected at 0.6% on the 9th of September. As I mentioned, the most significant data for everyone to look out for would be the core inflation rate and inflation rate out of the US. So on the 12th of September, we have the ECB interest rate decision. So that's sitting at a forecast of 4% from this, and previously it was at 4.25. I've got the Euro USD chart up on the screen on a weekly basis. The reason I got on this is just much cleaner, gives us a broader overview. Keep in mind we've got those two major economic news announcement coming out this week, so anything could happen. But my technical overview on this is that I'm bullish above the pivot point of $1.0880 with the initial target of 1.12. So I put that just there where the resistance line is, and 112.75 as well. So if we look at the RSI, it's above 50, signaling a bullish momentum. However, if the price falls below 10880 or expected downside target of 108.780 and 10670. So I'll put my key support levels here, which is 108.0, 106, just in line with the 50-day moving average. And as you can see, there's also the 200-day moving average, which is sort of in line with that resistance level as